Okay, here is the final objective in Chapter 2 for Account 200. To construct and use a trial balance. Before we get there, a few things I want to reiterate. Assets, expenses, dividends, they do all have debit balances. But keep in mind, expenses reflect a using up of resources, and they reduce stockholders' equity. So a debit balance for expenses is a normal balance. Dividends, not an expense, not. I'm just going to say it again because, oops, not an expense, not. They're just dividends. Period. Big period. Okay? Just dividends. Never put the word expense behind dividends. They are a transfer of resources from out of the corporation to owners, but not an expense. It's not an expense if you own it. Okay? They both reduce stockholders' equity. So even though they're conceptually classified as stockholders' equity, they will not be on the balance sheet, but they do have normal debit balances. Kind of weird, just got to know it. Okay. Liabilities, common stock, which is a permanent stockholders' equity account, and revenue, which is a temporary stockholders' equity account, have credit balances. Just like to point out, revenue, which is a temporary account, reflects resources transferred to the entity from its customers and increases stockholders' equity. Okay? So revenue has a normal credit balance and we increase it with a credit. Retained earnings is a weird one because it can have a debit or a credit balance. If net income over life is greater than net loss and dividend over life, then a credit balance. If net income over life is less than net loss and dividend over life, then it's a debit balance. If you go back to your statement of retained earnings, essentially on day one, everyone starts with zero. So if the first year you had a net loss, you'd have a debit balance of retained earnings. Okay. Once again, we're going to create the trial balance from top to bottom, going assets, liabilities, then stockholders' equity, permanent accounts, then dividends, revenues, expenses. To make it easier to create the financial statement. And I'm saying this one again because people forget. I know this can be totally boring, but this is like a big one not to forget. The retained earnings on the trial balance is the prior year's balance. It does not include additional net income and subtraction of dividends from the current year. Okay, so don't put it in. Don't use that balance in or on the balance sheet for this year. For current year, for the one you're making right now. Okay. So here we're going to have a lot of T accounts. Cash, and we just cared, so we got the beginning balance up here. Really, we just cared, I'm going to circle the ending balance. All right, so we got 10,000 in cash, 4,000 in AR, 1,000 in supplies, 2,000 in accounts payable. Look, asset debit. Oh, accounts payable credit. Stockholders' equity, common stock credit. Retained earnings credit. Dividends is a reduction. Debit. Revenue is an increase. Credit. Expense debit and expense debit. Okay, this might be a little difficult to toggle. 1041. I'm just going to write these real quick. We're going with the assets. Whoops, 10,000, 4,000, and 1,000. And if I remember, it was cash. I'll tell you what, actually, this may seem a little bit silly, but red in accounting means a loss, so I don't really. Oops. Grab my eraser. 1041 cash, I can remember that. Okay, here we go, blue. Sorry about that. 10,000, 4,000, 1,000. If you ever hear people say we're in the red, that means you're losing. You're in the black. It means you're making money. So I guess I should be using a black pen, but I wanted to stand out a little bit. Cash, I'm going to use A/R for accounts receivable. And then we had supplies. And we had one liability account, accounts payable. Then we had common stock. Retain earnings. Dividends. All right, dividends, revenue, salary expense, and other. Revenue. Salary expense and other expense. So here we go. Just notice these are assets. Here is a liability. Stockholders' equity, dividend, revenue, and expenses. All right, so that's the way it's organized. If you're creating one, it's going to make your life easier because you have asset, liability, stockholders' equity, right? So this is the balance sheet right here. Revenues, expenses here. This is the income statement. And then you have the dividends for a statement of retained earnings. RE. Okay, so let's get back to this. Accounts payable 2,000, common stock 8, 2,000, common stock 8, retained earnings 4, dividends 1,000. I think revenue was 28,000. Salary expense was 20,000 and other expense was 6,000. So 10 and 4 is 1 is 15. I get these numbers right. This is 2, 8, 4, 1, and oh, I see what I messed up. Did you? When I make mistakes, you learn more. Dividend is 1,000. Okay, so this is 10, 4, 15, 16, 20 is 36, plus 6 is 42,000. So the trial balance, we're going to make sure everything balances, because if it doesn't, we got to go find the mistake. 2 and 8 is 10 and 14, plus 28 is 42,000. So we know our debits equal our credits. And now we can use this information. We're not going to create the whole financial statements here, but we could easily. But I can calculate total assets, 10 plus 4 plus 1, bam, 15,000. What is net income? We have 28,000 minus 20,000 minus 6,000 equals 2,000. What is the amount of retained earnings on the balance sheet? Well, you started with 4,000. You're going to add 2,000 net income minus 1,000 equals 5,000. So on the balance sheet, the updated amount, and this right here is essentially a statement of retained earnings. This is essentially an income statement, and here is half your balance sheet. Okay, so the trial balance makes it really, really easy to create the financial statements. Once again, remember that this is the prior year's balance, which you have to take down here. And this is the 5,000 is the current year's balance. Okay. So if you're comfortable with this, you're going to be in great shape for chapter 3, where we start doing some more journal entries, but all of this stuff will continue to hold, and there'll just be more counts to deal with.